The Dow Jones Industrial Average plummeted by 650 points yesterday. This sharp decline came as President Trump announced new tariffs on goods from Canada and Mexico. The S&P 500 and Nasdaq Composite also experienced significant losses. The S&P 500 fell 1.76%, its biggest drop this year. The tech-heavy Nasdaq Composite tumbled 2.64%. These new tariffs have injected a heavy dose of uncertainty into the markets. Investors are worried about the potential for a trade war. This fear is reflected in the VIX, a measure of market volatility. The VIX spiked to its highest level of 2025. This market turmoil is a clear sign that investors are nervous. The tariffs, set at 25%, are due to take effect today. They target a range of goods imported from Canada and Mexico. This move marks a significant escalation in President Trump's protectionist trade policies. The president has repeatedly threatened tariffs on goods from these countries. He argues that they are taking advantage of the United States on trade. This latest round of tariffs has sent shockwaves through the markets. Investors are now bracing for the potential fallout. The impact on various sectors, from manufacturing to technology, remains uncertain. The coming days and weeks will be crucial for investors as they assess the full impact of these tariffs. President Trump argues that these tariffs are necessary to protect American jobs. He claims that Canada and Mexico engage in unfair trade practices. He points to the large trade deficit the U.S. has with both countries. Trump has repeatedly called for companies to move manufacturing back to the U.S. He believes these tariffs will incentivize companies to relocate. He also wants to pressure Canada and Mexico into trade concessions. However, critics argue that these tariffs will ultimately harm the U.S. economy. They point to the potential for higher prices for consumers. Businesses may also face increased costs. This could lead to job losses, the opposite of what the president intends. The tariffs on Chinese imports are also causing concern. The president has accused China of unfair trade practices and currency manipulation. He has also criticized China's handling of the fentanyl crisis. Experts are divided on the potential impact of these tariffs. Some believe the market will weather the storm. Others fear a significant downturn. Gustavo Flores Macias, a professor at Cornell University, believes these tariffs will erase recent market gains. He points to the uncertainty they create as a major factor. Gina Bolvin, of Bolvin Wealth Management Group, is more optimistic. She believes the market will see modest gains this year. However, she acknowledges that it may take time for the market to stabilize. The impact on specific sectors is also a point of contention. Goldman Sachs analysts believe the tariffs could boost some American businesses. This is because tariffs make imported goods more expensive. However, they also acknowledge that some businesses will suffer. These businesses rely on imports or face higher costs due to the tariffs. Jason Drofo of UBS Global Wealth Management predicts continued market volatility. He believes this will persist until President Trump's policies show a clearer focus on growth. However, he remains optimistic about the market's medium-term outlook. The coming weeks will be critical for the markets. Investors will be watching closely to see how the situation develops. Of particular concern is the potential for retaliation from Canada, Mexico, and China. If these countries impose their own tariffs, it could escalate into a full-blown trade war. In the meantime, investors are advised to proceed with caution. Diversification remains key in uncertain times. It is important to have a well-balanced portfolio. Keep a close eye on developments in the trade situation. Stay informed and be prepared to adjust your investment strategy as needed.